Welcome to Face Warriors. The seminar is being sponsored by Forest Park Futures. They are your solution for any trading issues or recommendations that you have with any broker. One stop with Trent will straighten everything out and give you some viable options if you're not satisfied with the broker you're with now. So you have a pretty big, Forest Park FX. Okay. So, the deal, we're out. So a lot of people were selling the crude off before it. Trump came in with the toughest sanctions. Doesn't look like, some people thought they might give it 30, 90 days to negotiate. That didn't happen. You have a spike up here. I'm going to be curious. I think we're getting close to Steve's number on 1.618 or so in the crude, but I can tell you that this high is not confirming on the 1. It's not confirming on the 4 hour. I'm not saying that this is a spot right now. Even the daily is not confirming compared to the high we had back at the beginning of the year. So I think Steve was saying 72, so we're not that far away. Could be a nice trade because this spike low that we had here, from wherever we pop, once we take this out, call it 71, could take it all the way back down to 64, 65, low 60s. So put this on your radar. Everyone understand and see the non-confirmations we're getting in oil. Give me a Y if you see it. You don't have to agree with me. You know, I think crude could go to 100, but there's always zigs and zags, and I'd say that the market's pretty long right here. Okay. Yesterday I talked about turnaround Tuesday trade in the Dixie, and that was right in here. It was, hold on, right in here. Okay, so as you can see, the 1 hour took out the 70 level. So it was good for a little scalp, and I also said give it breathing room. Use a 50 pip stop. That never would have been elected, missed it by about 15 to 18, and here we are now with the potential of finally getting a reversal day in the Dixie. So I know it's a long day, a lot can happen. Of course, it's being led by the cable stronger than euro, so it's putting euro pound in pressure. I want to get to that up after this. So I see no reason why we can't trade 92.20, and then we get back inside this channel. 91.50 or so is doable. 91.30 in there, which is the 2-week off number right here. 2 weeks ago, we closed at 91.53, so that would be a nice trade from here. Another 140 pips back down inside the channel. Give me a Y if you're with me. Hi, Craig. Hello, Susan. So obviously, you could tell, you know, you're only up 19, pounds leading the way at 42. I think some people are a little bit surprised about the yen strength. So here we are in the yen. We've already retraced 78.6 of this move. So if it's going to fail, it better fail from here. Otherwise, we're going to see another new high. So if you were a yen bear yesterday, it's an even better shorting opportunity today. Like I was saying yesterday, I just can't get too bearish US dollar yen as long as the S&Ps have some upside. And it looks like they're trying to come out of here. Actually, the NASDAQ 100 has the strongest chart. We're either going to put in a right shoulder up here, which says it still has some more left, as long as we hold 67.40. And I wouldn't be surprised to see one more high. Maybe get one more high in the NASDAQ 100, and that happens without the S&Ps making new highs. Maybe we go to 27.50 or something like that, and the Dow does not make new highs. So that makes it tough for me to get too bearish on the yen. I'm going to kind of key off of the yen based upon where I see indices going here. So we'll see if we're going to test this line again and I just want to wrap it with something that it doesn't look great right here, but it's one of those trades that it could be good or bad from here. So we're pretty close to halfway back in EG after we have this. So I'd say that the shorts have a lot of hope if they rode this out after this false breakdown. Probably the fate of this trade is going to depend on what the BOE says or how the pound reacts. Right now, the pound's acting okay, but we're right near a 50% retracement. Came in at 30. We're right in between the 38 and the 50. And if you look at it on the 1 hour, almost this could be a drive 2 here. We're diverging. And if you go the 30-minute, it's even more glaring. So I think, you know, a foot in the water here, maybe if it gets down to 30 on a third drive, but it's still my contention that this whole rally here, this could just be a correction in it. And now we've, you know, corrected almost half of this whole move here. So I would say not a lot of people trying to buy this thing and trying to force it down. So you're wrong. Your line in the sand would be under this low, which was the right shoulder. So it's a pretty tight trade. And if it starts turning good here, we get some kind of reversal day. Next time through this 88.50 level, we have 89.20, 89.50 up here. So that's what I see today. Our guest gave me a last-minute cancellation, so we won't have a guest today, but we have the regular team here, and wondering what Blake's thinking in the dollar, if he thinks that we're finally going to get a pullback in the dollar. What are you thinking here, buddy?
Well, hey, good morning, Dale. First of all, regarding the yen, good morning. There was a there's a big M&A deal that was that had gone through late yesterday and through European trade today. With the yen, that's regarding the Glassdoor deal. That was hold on, let me see if I can get you the specifics here. Hold on. Japan recruits purchases of Glassdoor for 1.2 billion M&A all cash deal, and so that had pushed the yen lower as the dollar yen rallied, and all the other yen pairs had rallied as well through European trade. And so that's unless we get a really big, and I was telling the guys in the chat room, unless we get a real big move in bonds, you know, there's probably going to see, you're probably going to see continuation yen selling, and you know, that's possible. And if you were in the chat room yesterday, which I wasn't last night, Joe Perry from our team had mentioned that might have been the catalyst, and he was right. And that is what pulled the dollar yen up towards you know, 109.80 overnight. Now let me see if I can grab the charts really quick to show you what the yen did. And there's actually a few things that are happening today that I think are important. But anyway, I did send this out overnight that we had this, like, you know, Gartley pattern set up. Rally would, you know, reach around 109.75, and you know, we did. We hit it, and we've come off a little bit. But I don't know if I would trust necessarily much downside here in the dollar yen, at least for the next couple of days. Like I said, we have to see a big move up in bonds to really unwind what we've seen here, at least for now. And I, you know, unfortunately, I put in a Canadian yen pattern in play yesterday with this double top, but man, with that M&A deal going through, I had to close it out. I had to close it out before it got validated, because, you know, this will end up being a false breakdown, more than likely. And the Canadian's actually seeing some strength this morning. We're seeing the Canadian currency across the board gain some strength. The dollar Canadian just slipped back through 129 as we rejected the 78% retracement. Matter of fact, you were asking about the dollar, Dale, and I picked up some euro overnight. Not a whole lot, but the DSI, or the Daily Sentiment Index, was at extreme readings last night. It came in at 7. So that is very low. And anything below 20 starts to get my attention. Below 10, it's like, okay, almost enough is enough. So I picked up a little bit of euro dollar, but I'm not really too comfortable with the euro unless we get back above like this 119 level. Once we get back above 119, then it starts the process of trying to give us a reversal. But we're seeing the dollar really, starting to pull back. Now, minus the yen, forget the yen for a second, but we're starting to see the dollar pull back like against the cable. The cable's, finally starting to get a little bit of a lift here after not making new lows. We're seeing that dollar Canadian pull back. You're seeing the dollar Swiss have stalled. We hit a lower high, so if we get back below parity, which we're getting really close to parity, we drop back below parity, that's gonna put some downside pressure on the dollar Swiss. So I think the risk is at this moment that the dollar gives us a little bit of a pullback. Again, the yen, a little questionable here. I'm not really too sure about the yen, but I would be looking at, because you can see it in all the other yen pairs. Like, look at the euro yen. I mean, this is a hell of a bounce as we held trend lows. Pound yen ripping higher, Aussie yen, the big bounce, New Zealand yen, Canadian yen, all, and again, all that is the M&A deal that's going through with Glassdoor. So, some pretty big moves here. Hold on really quick. I was short a little bit of dollar Canadian as we went through 129. I just closed that. I was just scalping. I just scalped the dollar Canadian short through here. So this move, 129 of wherever we just were at 74 is where I just got out of. So, or 75 is actually what price I just got out of. I'm just, kind of scalping around a little bit here. But anyway, it looks like to me that the risk is that the dollar does a little bit of a, at least a little bit of a pullback after this, really, really substantial move. And you can see it's early. The dollar index is setting up a bit of a shooting star. We might end the day with a hanging man. Who knows? Where if you guys don't know what a hanging man looks like, it could very easily, end the day with a green body with a long wick, which would still be, quite possibly a reversal sign. It could be, but right now we've got a bit of a shooting star developed, which is, that is the beginnings of, a possible reversal. But we got so much time left in today. I wouldn't necessarily bank on what you're seeing here. But I think that is a risk, Dale. We've seen a really big move and a big squeeze higher in the dollar. I know I mentioned this on the week ahead video, and I'll mention it again. The euro, and here, let me take a sip of my coffee really quick. Okay, the euro dollar has corrected a very big long position, and I have for months I've been looking for a correction down towards these levels, down into the teens, and here we are, 118. Obviously we're 118.80 right now, but I've been looking for a correction down here. Now that we're here, the question that you have to start asking yourself is, where does the euro become a value proposition, or where is the dollar a good short? And you know, I'm not sure if this is the level yet. I'm not sure if it's, you know, 117.60, maybe 116. I'm not sure, but I think that the euro at some point is going to be a long side proposition. Yes, I am playing it to the long side right now, and I've got a small position, you know, below where we're at. I've got my positions in the 60s here from when I got in front of the computer, but it's not huge, and I'm not convinced that this is the low. But I am starting to find the euro dollar more attractive down here for a possible turn higher. Do we go to 120? Do we go back to 121? I think it's all possible. Doesn't mean that let me just, I guess I can phrase it this way. I'm not married to the long euro dollar trade right now. I'm not married to it, meaning I don't have to stay long. I don't mind getting out and trying to get back in at some other point. I'm not
kind of like a blind date.
Yeah, it's like a blind first date. Yes, correct. Yeah, it's kind of, yeah, I kind of look at her across the table saying, you know, give me another six pack. No, I'm just kidding. I'm joking about that. No, but she'll be fine. Just give me a few more beers. I'm joking. I can't even tell you last time I've been on a blind date. But I am looking at the euro dollar as being more attractive down at these prices. So whether it's, like I said, whether it's the turn or not is not, you know, I'm not here to determine that right at this moment in time. But if we break above 119, I would feel a little bit more comfortable about being on the long side of the euro dollar. And obviously, if we broke back above 119.40, I would be, you know, then I'd be looking to hang on to this for a little bit longer. You know, but I have to see a lot of things happen. Now, there's a couple other currencies that are starting to roll over too. Look at the Nordic currencies. I pointed the US dollar Swedish krona out yesterday. I was short this thing too, and I made decent money. I shorted it at like 84, closed it at like 81, you know, somewhere down here. Made some decent money on the short side of this bad boy, but the bottom really fell out of it today. We had inflation data out of Sweden come out, and even though it was in line, but I think the month after month, month over month was a little bit stronger than analysts expected. But the bottom really came out of that thing, because if you look at the US dollar Swedish krona, I mean, this rally has been magnificent. And I'd been playing the long side of this thing for the last month. I mean, it's made me a lot of money on the long side over the last month when we had that false breakdown right here, and it's just been a, you know, really nice trade. We are seeing some of the air come out of this move right now. The US dollar Norwegian krona, another failure up here at the 618 retracement. You know, so we're seeing the ingredients right now of a little bit of a dollar pullback. I mean, you got the cable that has, you know, found support at the 200-day moving average. It's still, I still think we can rally to 137. If we get to 137 in the pound, whether it's today or tomorrow, I will be establishing a short. I'm just, you know, giving you guys a little heads up. That to me is, you know, the double top. Whoops, that's not what I wanted to do. But you can see the double top play here. That's what I'm looking to trade. I get rid of get rid of that. Okay. And you can see we stopped at the 127% extension of this last move higher. So I expect to move back up to 137, and we get up to 137, I will be establishing a short if we can get there. But yeah, I mean, these are things that I'm paying attention to, and I think that the risks are the dollar starts to pull back a little bit. Is it the start of something much greater, much bigger? I don't know. I mean, but I think it is the start of something, you know, whether it's a pullback or just or a full on reversal. I don't, you know, again, I'm not here to make that determination at this stage in the game, because we got to see what happens, you know, a week from now or several days from now if the dollar does continue to weaken. Why is it weakening, and is there material reasons why, from a macro level, why it's actually pulling back? You know, if there is a reason why the dollar is pulling back, you know, more than just a correction, then, you know, then we might have some basis or to a dollar bear thesis, but we don't have that right now. There's no real reasoning for me to be short the dollar other than just a corrective move at this point in time. And just so you guys know, before I found out about the M&A deal, I actually sold some dollar yen when we were at like 109.37, like right here. I still have the short trade because it's a small position. I have my stops above 110, and I'm not comfortable with it. So I'm out of the money a little bit right now as I'm in this trade. And I knew we were at least going up here. I did not add to my position because I don't like adding to a losing trade, especially when I can't see anything overnight. You know, when you know, the market's moving and I'm sleeping. I didn't want to just put out some more orders and get too heavy into a position while I'm sleeping, and I knew the momentum was going against me. So, but we've stopped there and we've shown a little bit of reversal. But I know why the dollar yen is up here. I know why it's trading higher. That makes me a little nervous about trying to add to a position. I'd be more probably comfortable if we drop back down to 109 and I just took a small profit and, you know, walked away from it. But I'm just trying to manage this trade right now, and at the same time being long a little bit of euro dollar at this moment. So yeah, and like I said, the cable. I mean, the pound looks like it could squeeze. You know, we get above 136, and I think this is probably going to turn into something a little bit more aggressive. You know, we get above 136, you might see a little bit more of a squeeze up towards that 137 level. I'm not trading the cable to the upside. I think the cable still has a lot of risk surrounding it with the ongoing Brexit negotiations, but you know, it's definitely ripe for a squeeze, considering the fact that Joe pointed it out when he was on Bloomberg last Friday, that it was, you know, I think it had a 3 drive, or, you know, whatever you would call that down there, Dale. But the fact of the matter is the pound has stopped going down for now, and we're not making new lows. So technically, it's ripe for a bit of a squeeze here. And with the overbought nature of the dollar, that wouldn't surprise me to see it squeeze back to 137.
I think it actually had a little stop hunt yesterday, Blake, to take out that low from Friday before it turned up. Just by a few pips.
Was it?
Yeah, enough to elect stops. Okay, guys, this is another warning for you. Do not put your stop exactly under a low, because you would have been picked off if you bought the pound Friday.
I guess it was. It was probably just maybe a pip or two, but
that's enough to elect it.
Yeah, no, that's possible.
Don't put your stops right there, because you know there are stop hunts still. They used to happen in the pit, but they still happen. Yeah,
right. What was I going to say? Today we have the RBNZ. So you know, make sure that you, and it's tomorrow morning, obviously, if you live in New Zealand or Australia, but for us in North America, it's later on today, this evening. We have the RBNZ, which, you know, this is our first experience with Adrian Orr, really, and to hear what he has to say. I'm going to my son has a playoff game tonight for baseball, where we're trying to get into the finals. So it's a very important game tonight. But the good news is, it's, now that I'm thinking about it, is later on this evening, so I will be around for the RBNZ. But this is going to be rather important because you know, the Kiwi we've sold off, and it's been pretty aggressive. We hit a new trend low, but the daily RSI has been divergent. We bounced off of some lows back here in December. Whether we get a significant bounce from here, or we continue lower in the Kiwi, has more to do with the RBNZ tonight. So pay real close attention to the Kiwi dollar, and I mean, personally, I wouldn't want to be short the Kiwi, not after this big drop here, not at this moment. I'd rather be short up at 71 cents or 70.50, somewhere up here. That doesn't mean it's going higher. I'm just saying that I don't think I'd want to be short the pair at this moment. But again, the reaction from this level is going to be all about the tone of the RBNZ and Mr. Orr. So it's going to be, I think Adrian is a gentleman, so if I'm not mistaken. So it's going to be that's going to be interesting tonight. That's something that's obviously on my radar, especially with the Aussie New Zealand. The Aussie New Zealand has pulled back a little bit. I still think the Aussie New Zealand, any dip down towards below 106 is the place you want to be long. But hell, the RBNZ could be more dovish from here, and the Aussie New Zealand could scream higher. But this is one of those that I want to be long, looking at dips like this to be on the long side if I can get it. Anyway, Dale, that's pretty much it for the dollars, the dollar and the majors. I think we all have to just be very aware of what the dollar is doing. Obviously, keep an eye on bonds, because the dollar yen, the rally has also complemented the sell-off that we saw in the bond market as stocks are stronger this morning. But if, again, the risk, I have to keep pointing it out, but the risk here is if the bond market starts to find its footing and starts to reverse, that's where, yields come down, and that's going to impact the dollar probably across the board. So, with that being
maybe one more touch of your wedge down there, Blake. I'd be a buyer if that happened, and that might be the time and place to short yen.
Yeah, maybe we get something like that. That's entirely possible, especially with watching the yen price action at the moment.
And S&Ps peak out down when the bonds are down there. S&Ps peak in yen, and maybe that's a bond low. That's going to be a nice divergence.
A big divergence down there for sure, as we've been diverging really for the last couple months. All right, well, I'm going to pass it over to my colleague Steve. Steve, good morning.
Hey, Blake.
How you doing?
Night.
Hi, Steve.
I'm good. A little bit tired. We had some technical issues, so I had to wake up quite early, and I've been working since. But I'm good. I'm good. How are you?
Good. We've seen a lot of moves in these yen pairs overnight. So the dollar yen, euro yen, all those yen pairs probably are going to be really good for analysis today, and some opportunities as we're not hitting trend lows in a lot of those pairs.
Absolutely. We're seeing some reversals today. I think they should prove to be good enough for some counter trend moves. I mean, given the near term dollar strength that we had, I think that this should be the beginning of some type of a correction, at least for the dollar pairs, and so some nice rebounds from nice technical levels. We're going to go through them.
Awesome.
We have PPI data also coming out. I bet you're about to start trading that, right?
Yep, I've got to go because it's less than a minute from now. So, you guys, good luck today. All right.
See you later, Blake.
Bye, Blake. So we have PPI data coming out. 0.2 expected month on month for the core as well. It's exactly the same expectation. Previous one was 0.3. I'm having here open on the bottom right. Now I can maximize it. You can see it. It's the USD yen. USD yen rebounded perfectly from this channel's support. To be honest, I was expecting at least one more leg to the downside towards 108, 108.50. But instead, we actually rebounded. So, the the uptrend still, I mean, the short-term uptrend still remains intact. So there's.
What do you think about the fact that it's, I think, for the second time above the back test of that weekly breakdown? You're the bigger picture if you just enlarge it.
PPI for final demand rises 0.1. So PPI a little bit weaker than expected, 2.6 year on year versus 2.8 year on year. Building permits for Canada stronger than expected, 3.1 month on month versus 2% expected. So PPI came out a little bit on the weaker side, but so far we're not seeing any real major response. I mean, the pullback has been minuscule for the time being, so I don't see the market expected to do much. 0.1 month on month versus 0.2 expected, as I said before. So let's see if we're going to get some kind of follow through. Regardless, I think let me answer your first question. Your question was, what do I think that USD yen is trading once again above this trend line? Not much, because it closed below it on a weekly trading base, on a weekly closing basis on Friday. And nobody tells us that the same thing can happen again, right, Dale? So I'm not paying so much attention to it on intraday moves. I mean, we haven't even seen a daily close above it today. I mean, you never know what's going to happen. But to be honest, I'm as I said, we can't refuse the fact that this is an ascending channel we were monitoring since before. The ascending channel is still holding, support held perfectly. So as long as that's the case and we don't get a confirmed close below it, I'm watching levels above, where the 200 DMA comes at 110.2 almost. The 61.8 of the last move lower is at 110.87. So these
I think we're going for the blue line on top.
This one, this descending trend line, you mean?
Yeah.
We'll see. It's not going to be easy. I definitely don't expect us to move there without a pullback, right? If you remember, we had this conversation with Gregor yesterday as well. I told him that my thesis having to do with the USD yen is that I remain absolutely neutral until I see what kind of a nature the first pullback is going to have. So I'm expecting to see some kind of a pullback sooner rather than later, and I want to see what kind of nature, what kind of structure that pullback is going to have before I have a stronger opinion about that. One thing is for sure, though, having to do with at least the major USD pairs. Here is the Euro USD. Today so far is a hammer. Here is the cable. The cable had stabilized, and today we are producing like a stronger reaction from the 200 DMA. Here is the Aussie. Another hammer here. Here's the Kiwi. Another potential reversal. So many potential key reversals are trying to form today, which, if verified by the end of the day, I think that, they can indicate that finally we're going to be seeing some kind of a pullback for the dollar. This is the DXY, by the way. Blake already showed the DXY. So far today, it's a shooting star. I wouldn't find it impossible, even if the DXY is to remain bullish, I wouldn't find it impossible to see a pullback towards the 92 area. Currently at the 92 area, we have the 200 DMA, or even a little bit lower, to retest this broken now descending trend line resistance. It can act as support from this point on. So in all honesty, I think that a pullback in the near term is going to be healthy, might give us opportunities to try to be long the dollar again. For example, as I've said multiple times, 137, 137.50, 138. That area, has some interesting entry points for the cable, and I'm really looking to be short the cable from those levels. To be honest, I'm not looking so much to be short the euro, because between the two of them, I would rather be short the cable. So, but if somebody wants to be short the euro, definitely, a rebound towards the 120. 10 area where the 200 DMA is, or even a little bit higher, will definitely also produce some kind of an opportunity. Blake already showed one of the biggest reactions we've seen is in the USD SEK. I was showing that a few days ago. You can see it here that perhaps we will reach the 161.8 and pull back. Now, in case of a pullback, we said that this is the first area of support. Now we seem to be breaking below it, although it's early in the day. If that ends up being the case, I would then be looking for the 850, 851 area. That should be a very strong area of support. So nice, healthy pullback from here. 850, probably a good opportunity to be buying. As you would have said, Dale, this reading that we got on the daily RSI, which was roughly at 83, is probably a confirmed high, right? So yeah, so it tells me that a healthy correction is going to be a buying opportunity, and the chances of this being like a larger reversal are quite low. USD NOK, I'm still short this one, half a position. USD NOK did break to new highs, but it's showing some nice reversal signs. Once again, I'm once again in the money. So this ascending channel still remains valid. I would also want to see like a pullback from here. You already mentioned crude, which definitely plays a role in what NOK is doing as well. Crude dismissed completely the sell-off that it saw intraday yesterday. It actually closed flat on the day yesterday, and we're pushing higher today. 72 is my ultimate target. I would really want to see what's going to happen from there. I will be actively looking to be short. Now I want to have a look at a few yen pairs, because given the fact that currencies have been rebounding today against the dollar, but the dollar has been stronger against the yen, has obviously created some very strong moves in the yen pairs. I specifically want to begin by showing one of them, the pound yen, because I was very specific yesterday. We also discussed it with Grega. I said that I believe that if first of all, that pound yen was testing a confluence of supports, and if we broke below that confluence of supports, a lot more downside was coming. But as you see, that's why confluences are very nice. That confluence of supports was enough to contain price for 3 consecutive days, and today that's the 4th day. We're seeing some very nice strong rebound from there. So as long as this trend line here is holding, we don't have a longer term breakdown for the pound yen. Still, though, I have to say that I would probably still be looking for shorting opportunities. So if we do see a pullback towards the 150.50 area, I will probably start establishing a short position. So I haven't yet put orders, but I'm considering like nimbling in from 150.50 and adding all the way up to 152.70, perhaps in increments of 1/3 or 1/4. I'm going to decide how I'm going to do it, but I would be interested. I'm looking actively to establish some kind of a short exposure in the pound yen as well. Euro yen, I'm actually thinking, depends on how we close on the day, of taking profits, booking profits on the rest of my half short position, because today is showing signs of a reversal. It might even rebound back to the 131.60 area and test it this time again as resistance. Regardless, I have quite a nice profit here in the half position that's left. I can't think of a reason of why I shouldn't be booking it if we do close on the highs today. So I might be calling this trade that has ended. I was actually looking for 129. We made it almost there. I mean, we came like 25 pips from my target, but as I said, there's no need for me not to protect my profits. If we do close on the highs of the day, this is going to be quite a strong reversal. Might provide some follow through of a few more days, so probably I'm going to be booking it. And as I said, I have no problem of actually ending up switching my position, being short the pound yen eventually, if we do see this rebound unfolding a little bit further. Now, I also mentioned yesterday when we were talking with Grega, he was bearish the Kiwi yen. I'm also bearish the Kiwi yen, but I mentioned yesterday that for me, to get confirmation that the Kiwi yen is is really bearish, and it's headed a lot lower. I would really want the 76 area to be broken, because it's a major horizontal area of support. You can see it here. It actually didn't break. Oppositely, it produced a very nice reaction so far today. So as long as this area holds, I will be I would be very careful. So I have no exposure in the Kiwi yen, and unless this area breaks, I'm not even looking to have one. I don't want to play it counter trend being long. On the other hand, I definitely wouldn't want to be short near such a critical area. Let's have a look at the Aussie yen as well, and then we can go through a few questions. You can see Aussie yen also rebounding. I can zoom out here. You can see how important this area of support has been. It was resistance multiple times here. It then started acting as support. We briefly broke below it here, but I still have it as an area of interest. It's also the 50% fib of this move higher. Let me draw it so you can see it. It's a 50% fib from this move higher. So, another interesting horizontal area of support is holding today. We're seeing a rebound. So same deal here. Before I would turn, outright bearish, I would really want to see this being broken to the downside. I still believe that eventually these areas are going to break, but nobody can discount the possibility of like some kind of a stronger rebound prior to that. Okay, so let's have a look at a couple more pairs, and then we can go to questions. I was looking for 130 eventually to be tested for several days, and this is exactly what happened. We did break finally above this 128, 129 zone that was containing price. We perfectly came and tested the confluence of the 78.6 and of the last move lower, and also horizontal support resistance area, and also a round number, so a psychological level at 130. We seem to be getting rejected from here. I wouldn't find it impossible for price to correct lower. I think Gregor's view yesterday was more or less the same about it. And this is the CAD yen as well. I was looking this for a formation inside this ascending channel. We seem to be breaking below it, but we never broke below the channel to confirm that the move lower is resuming. I remind you that several days ago, and for a good reason, because we hadn't broken the channel yet, I had drawn that perhaps there is one more leg missing to the upside, perhaps towards the confluence of the 61.8 and the 200 DMA before actually resuming to the downside in the CAD yen. So, this recovery scenario still remains alive. And why not, as I said before, another push to the upside before finally rolling over and showing more weakness. I do expect more weakness for two reasons, in case somebody is wondering. Reason number one, because I think that this whole move to the upside has clearly corrective characteristics. On the other hand, the last move lower, this one, was clearly impulsive in nature, and so far a move to the upside, even if this unfolds with one more leg, will still look in my eyes as corrective. Okay, so what hasn't changed is the fact that I'm looking at some point for the CAD yen to resume to the downside. But as I said before, and as I was thinking even weeks ago, that doesn't mean that this can't happen from higher levels near 87, 87 and a half. So let's go through and have a look at a few questions. I know that yesterday we didn't manage to answer many of them because Gregor was with us, and it was a good idea for, to let him give us his point of view, which is always interesting. He usually comes roughly once per week, so I didn't want to interrupt him much. Please arrange DSI for face members. Yeah, that's for face members. We can't publicly give that, Assad, I'm afraid, but we are posting every single day the DSI on the chat room for ForexAnalytix members. Now, explaining the concept of DSI is actually quite simple. The DSI is the daily sentiment index. we receive it. Let me pull up an example for you here. We receive it, we pay for it and we receive it every single day. And the DSI is actually, here it is, you can see it. The DSI actually gives us an indication of the market's sentiment. So it scales between 0 and 100. Closer to 0 is very bearish. I mean, 0, for example, 1 would be extremely bearish, 99 would be extremely bullish. Usually any readings below 20 or above 80 show extreme sentiment, especially in the rare occasions that you get readings above 90 or below 10. In this case, we don't have an FX pair that is doing that. Only the dollar was very near that. As you see, yesterday it was at 89. It acts as a contrarian indicator, right? So, for example, in the short term, the positive thing about the DSI, in my opinion, and let me disclose something here, we are actually we are experimenting in ForexAnalytix to create an indicator of our own that is going to combine more or less sentiment and positioning, because we have the COTs showing the market's positioning. We have, for example, the DSI or other indices that you might have seen that give an idea about the market sentiment, but both those elements are quite important because they can both act as contrarian indicators. So we are actually experimenting, but that's probably something we're going to work on more during the summer days because we have many active projects at the moment of creating an indicator that's going to combine positioning and sentiment, and is also going to be a contrarian indicator. So when both the positioning and sentiment, just to give you the rough idea, is going to be pointing to very bullish readings, that's going to be a warning signal that something might be about to reverse lower, or the exact opposite. Okay, so this is how the DSI works, and as I said, ForexAnalytix members can see the chat room every day. Yes, Dale?
Hi, just one more thing to say about the DSI, which is probably its strongest point, is that, okay, first of all, it's been around for like 30 years from what I remember, but also it takes into account the sentiment of, from what I remember, small retail traders and small retail accounts. So it's not the big institutional accounts. So these people theoretically are most likely to be wrong, at the turning points. So,
and if I might also add, Stelio, here, it also has another advantage over COTs, is that it's much faster to react to the market swings, so it can pinpoint more easily near-term swings as well. For example, it was only very recently that the sentiment about the dollar was extremely bearish, and you see that within a few days of a strong recovery, the DSI reached from extremely bearish levels to extremely bullish levels, while the COTs, for example, market positioning, would have taken a lot more time to adjust, right? So that's another, if I may add here, benefit of the DSI. By the way, my voice comes through without problems again, right? So we
yes,
okay.
It's perfect. You just have that Greek accent, but that's not the problem with the system.
Yeah, I know. This is an inherent flaw. It's not easy to work on that. I'm sorry for that.
Whatever it was, you fixed it, man. Well done. It looks like you fixed it.
Okay, good. So that was an interesting question, and thank you for asking. Now, we have questions about the metals. Let's have a look at them. So, gold. Here it is. As you see, gold has been trading in a heavy manner, but we have to admit here, as we did with the pound yen, that this confluence of supports at around 1,300, 1,305 is holding very nicely. We have a confluence of supports here. It's the ranges bottom, it's a horizontal area of support, it's a 50% fib of the last move higher, it's also the 200 daily moving average here, so multiple supports here. And as long as this area is holding a support, if I was a short-term trader, I would definitely even be looking for a rebound here, because the reward to risk ratio is very nice and appealing. Now, if you're looking for a longer term play, obviously you would still need to wait for a breakout, either higher or lower. Now, silver, same situation here. You can see we still remain in this long-term consolidation. Palladium has stalled near the 1,000 level. To be honest, not really a clear indication so far. I mean, I'm not seeing some big signal that this was the end of the correction, but I will feel a lot more comfortable if we do break once again above the 1,000 level. Okay, and I think there is a friend that asked for platinum as well. So platinum, I have to tell you, I'm not really trading. I mean, I don't think I've ever traded platinum, if I remember right. But I have to tell you that if we zoom out here, you're going to see that platinum definitely remains in a choppy consolidation as well. It was looking like it was breaking out here, but since it was breaking above a triangle, but then it started pulling back once again. So this was a false break above the previous high. On the other hand, as you see, it's testing some nice horizontal support. It has been rebounded from it. I would say that really no big signal for platinum as well. I mean, since this break higher from this major trend line, you can see if I zoom out how important this trend line was, didn't produce some follow through. I would have to say that there is not much to do. I could even understand why somebody would consider this a false break to the upside, which in essence would end up being a bearish signal. Okay, and now let's have a look at copper as well. Unfortunately, there is not much I can add for copper. It's still trading within a very choppy, slow consolidation lower. But one thing in my mind is very clear, that either we get a break below 293 or above 318, we should see follow through, right? So for me, anything that happens between here is purely noise, and I really don't care about it at all. But I will start caring once we get, which eventually it's bound to happen, either a break lower from here or a break higher from there. Okay. Now we have a question.
Steve?
Yes, Dale?
Sorry, before you continue, just one little thought. What I've been quite surprised by is that metals, okay, maybe not platinum that much, but the rest of the metals, they've been quite resilient despite the dollar strength the last month.
That's true.
If you look at silver price, it's exactly the same way it was 2 months ago. When but anyway, it's just something to keep in mind, that the dollar has been doing very well, but metals, okay, they haven't been rallying the last month, but they haven't really been going down a lot. So it kind of shows strength. Well, potentially, I don't know. Just something to keep in mind.
I'm in total agreement with you. By the way, Stelio, you might be interested in seeing that actually, because I know you like being sort of the euro against other currencies. For example, I also want to show you, we have a question about euro SEK, that's why I opened this, but I want to show euro NOK as well. First of all, huge reversal from the euro SEK. What I haven't measured yet, and it's a good idea that we do it together, is if the euro SEK actually hit this cup and handle formation target. And the answer is that it did. You can see it here, right? It's this red line projecting from the breakout point, and as you see, this was a beautiful formation. It actually delivered, because it even exceeded by a little bit the target, and now we're seeing a big reversal to the downside. That was a very nice signal. Unfortunately, I missed it. I didn't pay attention. Yeah, unfortunately, I didn't pay attention to it.
But it is textbook, and the Riksbank was slightly hawkish. Was it yesterday? And it started pulling back, and the euro is obviously pulling back.
Look at this beautiful key reversal here. It's a key reversal. It's an outside black candle, and even if we go to the weekly, you're going to see that we are about now to form an evening star formation on the weekly chart. So this is something I would be very careful with. On a daily basis, we are about to confirm a breakdown as well, because I was monitoring this ascending trend line. The day is not done yet, so we might end up holding it. But you can also see here that there is a horizontal area, a little horizontal area of support that we're testing. So bottom line, today we might, in essence, confirm a larger breakdown, in which case I think, you know, this will be an interesting pair to monitor. Now, EuroNOK, quite more complex. It is consolidated. It has been drifting lower within what appears to me like a corrective move. So I wouldn't be surprised. Just look at it. If I zoom out, you can see that this is a prolonged uptrend, right? There is no question about it. I mean, we've been in this uptrend since summer of 2012. So it's almost 6 years now. And for the time being, this move lower from the highs does not seem impulsive to me. It even looked like we might be forming an inverted head and shoulders formation, but this never got verified because we never saw a break higher from the neckline. But still, I have to say, despite the fact that, yeah, we might see another pullback there, I don't yet have confirmation that EuroNOK is bearish in any way. Let's also have a look at another pair that we rarely watch, which is the Euro MXN. As you see, an equivalent situation here, something that appears like a corrective formation. I'm not even sure it broke out, because we can redraw this like that, in which case it hasn't. So Euro MXN also potentially shows signs that it wants to break higher, but it isn't doing so yet. In all actuality, it seems to be on resistance as we speak. Now we have a question about the USD ZAR. Speaking of the MXN, let's also have a look at the USD MXN, showing signs of a potential pullback from here. But I have to say, the fact that it broke above this descending trend line tells me that you know, it wouldn't even be a bad idea to be buying a pullback towards this trend line, or a little bit higher towards this horizontal area of support resistance. Now, since our friend was asking about the USD ZAR, let me show the USD ZAR. USD ZAR, you know, tested the highs once again today. It's showing some weakness once again. We might see a pullback from here. I said that the next target was the 161.8 of the head and shoulders formation. The 200 DMA is also there. If we do see a pullback, I would be watching, I would be monitoring 1220 as support. As long as we remain above 1220, you know, the pair remains in corrective, in a corrective pattern, right? USD Turkish lira is showing a very, very nice reversal today as well. We said yesterday that at some point, sooner rather than later, it should provide, it should produce some kind of a pullback. This might be the day that this pullback begins, in which case I would be monitoring 415 as the first area of support. Okay. Dale, you do have a guest today. Am I right about that?
No, you're incorrect. You're incorrect.
No guest today?
Yeah, I announced it. I announced it at the beginning of the webinar.
Sorry, I was in a meeting, so I lost the very first.
Okay, yeah, no guest.
Okay, okay. So
last minute cancellation.
It's okay. It happens. It
sure
happens.
It does. Yeah.
But
you know, if I've noticed for, you know, a day or so before for someone to cancel, then I can find a replacement. But
absolutely, I know that.
You know, so
you have a huge list of people that are looking forward to being interviewed by you. Everybody knows that.
Yeah, tomorrow should be good. Don Mead is he's a consummate bear in equities at 7 Sentinels. So I'm really interested in what Don's take is in here. So great analysis once again, Steve. I guess I'll see you guys at our meeting today.
Definitely, but let me cover a couple of more pairs because we have a question.
I'm bringing a natty pack to the meeting. All right.
You should do that, yeah. I have two more pairs to cover because people have asked for that.
All right.
One of them is the pound Aussie. I have to tell you two things. First of all, the fact that the pound Aussie held this support, which was a very nice confluence, it was a 61.8 of the last move higher. It was also horizontal area of resistance. You can see that it actually produced two highs. Definitely keeps the bullish scenario alive. On the other hand, I have to admit that I was expecting that a pullback towards these ranges support would produce at least one more reaction lower, which doesn't seem to be happening. So if we do close the day above this area, I wouldn't rule out that this was the end of another corrective move. I wouldn't really rule it out. Until then, I remain neutral. I haven't been involved with them for some time still because they keep producing higher lows, and this is something to take note of. I only traded the other, some time ago. What was the Euro Kiwi? I was short, and that was a fine trade. But I have to tell you that on the other hand, momentum to the upside seems to have stalled, and that's one of the reasons I'm not really looking into buying them as well. I would be doing so if I saw some kind of a stronger pullback. Now, I also have a question about the Aussie Swiss. I don't even remember when the last time I might have checked that could have been. It wasn't that long ago from what it seems. But in all honesty, I don't really see something here, right? I mean, what is this? Is it a triangle? It likely is. I would say that I wouldn't be doing anything with the Aussie Swiss yet. You can see here why, right? I see a triangle more or less. So probably better opportunities out there. We're in the middle of a triangle, in the best of my knowledge. Okay, Dale, thank you very much. I'll see you on the. By the way, two more things very fast. First of all, our new much improved mobile phone application has been released, so you would want to update to that. It's free, of course. And the second one is that we're getting very close, less than 2 weeks away from actually releasing the new site, which is very beautiful, very much more efficient. You can see it here. So you can look forward to that if you're a ForexAnalytix member. I think you will be very happy with it. Okay, Dale, thank you very much.
Okay. And also, don't forget, guys, if you question the safety of your funds at your broker, or you're not happy with the spreads or the platform, feel free to give Brent a call at Forest Park Futures, and he'll get you straightened out and give you many options to consider. So with that being said, don't just count your pips, count your blessings, and I'll see you tomorrow. We have a great interview with Don Mead at 7 Sentinels. We'll talk to this bear and see what he thinks is happening in this market that's been sideways that, I can't predict right now. These S&Ps are still looking for maybe one more high in the NASDAQ, but it'll be great intelligence gathering tomorrow with Don. So guys, enjoy the rest of your day. You're welcome, Tom. I'm the best. Oh my gosh. All right. Well, good to be the best. Today I'm a hero, tomorrow a zero. What do you think? All right, everyone. Have a great day. Don't forget, join. Take the trial if you haven't. If you don't think in 10 days it was worth 10 cents a day, I'll wire your refund. Okay? All right, my friends. Good hunting the rest of the day. See you tomorrow with the rest of the Dream Team and being live streamed. You're welcome, Kareem, on investing.com. Adios. Look at that beautiful platform. These guys work like dogs.